What's going on, y'all? I'm Marcus. You're at the channel of the Debt Free Dad, where we're following my family's free. Blah, 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 blah. What's going on, y'all? I'm Marcus. You're at the channel of the Debt Free Dad, where we're following my family's freedom to financial journey. I'm bugging. What's going on, y'all? I'm Marcus. You're at the channel of the Debt Free Dad, where we're following my family's journey to financial freedom and learning about finance along the way. As always, before we dive into the video, I like to give the disclaimer. I'm a licensed attorney. I'm not your attorney. This is not financial advice, so you're not getting any of that. This is just, educational purposes only, my opinion, and I'm letting y'all know what's going on in the household of the debt-free dad. Today's video is going to be an interesting video. In today's video, we're going to talk a little bit about the basics, the fundamentals of how to read stock charts. It's interesting because, we have a lot of investment challenges, and even I've been doing an investment challenge for almost a year now, going on 11 months, almost a year now. And during this whole time, I talked about some of the things I considered before buying the stock, but I never sat down and explained, hey, this is how you read a stock chart. And so I'm going to go over some of the beginner terms and concepts of reading a stock chart. Now, there are a lot more things that I could explain about stock charts that relates to how to identify patterns, how to identify entry and exit points, but I'm just going to give a general, rudimentary, basic overview so you can look at any stock chart, you can look at a crypto chart, and you can be able to have an understanding of how the performance, when is a good time to exit, when is a good time to enter, so you can have just those basic fundamental concepts down. So I'm going to throw some stuff up on the screen. I'm probably going to throw it up to cover the entire screen so you can get a good view of the image and avoid looking at my mug for a short period of time, which was always helpful. So let's go ahead and dive right in. First, let's talk about a little bit of the definition. So what we're going to do is I'm going to explain the definition, then I'm going to go to an image, point out on the image where the particular term that I just defined is. So the first thing that we want to talk about is resistance. What is resistance? I actually have a definition that I pulled up so you can get it. I'm going to give the definition, then I'm going to drop it to you in debt-free dad-isms, what it means. Resistance. Resistance is a price that a rising stock can't seem to overcome. Once the stock hits resistance levels, it often stalls and reverses, okay? So essentially, the debt-free dadism, resistance is a price point where stock is going up, but it hits that wall and it can't break through that glass ceiling. It like, wow, man, this stock is going up to $50, and every time it hits 50, it falls back down. It can't break through that glass ceiling. Now, I'm going to pull up an image to give you all a better understanding. Okay, take a look at this image that's on the screen. This is an image that depicts support and resistance. We're talking about resistance first. You can see on the chart where resistance is identified at $15, $25. So to identify resistance, you see where that stock price is going up. It hit $15, then it dropped back down. So the resistance is that price point where the stock can't seem to get past. So essentially, it's $15. The resistance can go higher as the stock increases in price, but essentially, bottom line, resistance is a price point that a stock hits that it can't seem to overcome or get past. Now, the next term that we're going to talk about while we already have it on the screen is support. Now, I'm going to actually go ahead and provide the definition while we're looking at it. Support refers to a price that a stock rarely goes below. This is a level at which buyers tend to purchase a stock. So if we take a look at the image on the screen, the resistance for this imaginary stock, Debt-Free Dad Corp, initially was $15. The support line was $4. Why was $4 the support line? Because this stock hardly ever goes past $4. Now, keep in mind, the resistance can increase and should increase as the stock continues to grow, and the support should also increase if it's a good stock. So again, resistance we identified as 15, 25, 35, 50. Those are all resistance where the stock actually rose to that price, then came back down. And most times, I think of stocks as kind of like a slingshot. You always have pullbacks from a price. No stock is just going to go up forever and ever. Is that 15? Is that 20? Is that 25? You always have a pullback, and pullbacks are healthy. This pattern that's illustrated on the screen is exactly how most stocks, not all, but most stocks tend to flow. The stock will rise up, it'll hit a resistance point at $15, it'll pull back, and then the farther that pullback, looks like a slingshot. The farther you pull back a slingshot and let it go, the farther that the object, the rock, the stone, whatever it is you're shooting, will go. That's kind of how stocks happen. So the support level is the point where a stock rarely or would not fall below. So you can see the resistance at one point was 15. It touched 15. The stock bounced back down and went down to $4. The stock never went past $4. So 4 became the support. We got a good support around $4. Okay, next is slingshot. It pulled back, then it went up to get higher highs. And so when you see where it says higher highs and higher lows, essentially the concept higher highs is you want your stock to have a higher level of resistance. So higher highs, the high was 15, then it pulled back, but it had support around 4, then it bounced back up to 25. But you can see on this chart that this stock is continually getting higher highs. The high was 15, and at one point it pulled back, then the high became 25. Then at one point it pulled back, then the high became 35. Now, the same way you want to see higher highs in your stock, you also want to see higher lows. So the low point, the point of support was $4 initially. Then the point of support became $10. Then the point of support became $20. Then the point of support became $30. So that's always a good sign, just if you're looking at a stock on its face, to see that, wow, this stock over the past 6 months is continuing to hit higher highs. So the highs for the stock continue to goes up, and the lows for the stock continue to go up as well. So those are some of the elementary concepts that you need to understand: resistance, support, higher highs, higher lows. You don't want to see a stock having lower highs over a long period of time or lower lows. Now, in some instances, that does happen if it's a stock that you have confidence in. You actually did some research with regard to the company's fundamentals, their product, their consumer base, their market cap, what their exposure is, if there's any pending litigation, good or bad. Those are some factors that can always make a stock go up and go down. So just because you see a stock pull back and have lower lows or lower highs, it doesn't necessarily mean that's a bad time to buy, because the name of the game when you're looking at any stock is you want to try to buy when it's low and you want to sell when you're high. But those are really the 4 definitions that you need to take away. The next thing that we're going to talk about, and this is going to be relatively I guess, simple. OHLCV. And I know y'all probably thinking, what the hell is OHLCV? So take a look at the image we got on the screen right now. I'm going to point to and show a couple of things, okay? But when you look at this stock price, now that we know what resistance is, now that we know what support is, now that we know what higher highs and higher lows are, OHLCV. Essentially, if you look at the top of this image, you have the open price. That's the price that a particular stock or commodity, even if it's a cryptocurrency, that's what it opened at. That's the value of this commodity. That's the value of this stock. Excuse me. That's the value of this stock at the time that the stock market opened. High is the high for the day, or you can set it up on your image on your high is the high for the day, the week, the month, or the year. You have options to kind of back out and get a bird's eye view of how a stock is performing. But typically, your high is what the high price point of that stock was for the day. The low is exactly what I'm saying. It's the low point for what that stock was for the day. Close is the price of that stock at the time that the market closed. Now, just be aware that even though you have normal market hours, like just like every company has business hours, they have trading that occurs pre-market and post-market. So there is trading that goes on. If you look on your apps that you're using, Some apps allow you to trade in the pre-market and the post-market. That's either before the market officially opens or after the market officially closed. And the next is the volume. And you see here in this example, the volume is 2.5 million. Essentially, what volume is the number of shares that were traded, that were bought, that were sold, where an options contract was put out. But essentially, it's the number of total transactions of shares for a particular day. So on this day, there were 3.5 million. I couldn't see. There were 3.5 million shares that were either traded, bought, sold, had some type of options contract that occurred on this day. Now, let me give you a caveat because when this video was just really to give you a quick run through so you can understand the terms or look at a chart and have some idea what's going on. And these definitions work if you're looking at stocks, it works if you're looking at cryptocurrency as well. But I will tell you, some people, when they invest solely off of identifying trends in the chart of a particular stock. So let's go back and take a look at what we just had on the screen. Okay, what we have on the screen here, we talked about, support, resistance, higher highs, higher lows, lower highs, lower lows. We discussed all of that. Take a look on the right, no, well, on the right hand side or the left hand side, either way. But let's start out on the left hand side. You see where you have that stock pattern is kind of in that square, and inside of that square, if we look at that square, we can see, you can see just a kind of trend, and essentially, what we have inside of that square is referred to as consolidation. Now, essentially, what consolidation is I often refer to it, and a lot of people refer to it as a stock is trading sideways. A stock isn't necessarily going up and increasing, is necessarily not going down. It's kind of staying in this particular pattern. So we can see, according to this chart, from September through the middle of October, this stock, imaginary land, because it's just a bogus stock. I just wanted to use the chart, but you can see that stock is kind of trading sideways. It's not really going up, down, and that's a normally when a stock trades sideways on this consolidation point where it consolidated within a certain price range. That's interesting because it creates a lot of uncertainty. We don't know if the stock is going to get out of that consolidation phase and going to go up or going to go down. But that's just kind of when you see a stock trading sideways like that. Again, as always, again, this isn't financial advice, but when a stock is trading sideways, as we have on this uh, particular image on the left hand side, it's kind of staying in that same price range over a period of time. It's a difficult time to determine if this is a good entry point or potentially an exit point because based on the consolidation and how long a consolidation period may last, we may not be able to identify just from the chart if the stock is going to go up or if the stock is going to go down. Now, I've never been a proponent of solely looking at a chart to determine when to get into a stock. I like to actually, look at the chart, but I also like to look at the fundamentals of a company. So again, a lot of times you hear, oh, if you're fundamental analysis or technical analysis, so often in our society we either think is this or that, and no, you can have both. You can invest in both. Two things can be true. You can use two things to your advantage. So typically I'll look at a chart, and for instance, if I were looking at this chart and I see this chart is trading sideways, and let's just say we only have September through mid-October. Let's take out, so we only see that trade where the stock is trading sideways. Once I see this stock trading sideways, the first thing I would do is I would actually go look up some of the reports filed with the Security Exchange Commission related to the company. I would do searches on open source via Google or Yahoo or whatever the hell platform you want to use to find out what news is going on in the company. I would do search to see if the company has any outstanding or pending litigation that could be favorable or harmful to the company. And that is what I would use to make that determination of, in this consolidation period, because we're imagining that we're only and it's only October 15th. So we're not seeing November and all that. We're just looking at this consolidation period. But I would use those factors to determine, based on this consolidation, is this a good time for me to buy in? Because the fundamentals that I looked at of this company show that this company has a trajectory to go up, or the fundamentals may show that this company may come out of this consolidation and go down. Um, but I just wanted to give a really quick, fast video on the fundamentals of reading the stock chart. Hopefully, I explained it well enough without making this video too damn long. I tried to give you the Reader's Digest version. I'm aging myself. People probably don't even know what the hell Reader's Digest is, but I tried to give you the short and quick version so that you can look at any investment chart for a particular commodity and just have a general understanding of what's going on. I hope this video helped y'all. As always, hey, y'all take care. Love y'all. Be blessed. I thank y'all for tuning in. I truly, truly appreciate the support. I'll talk to y'all soon. Peace. Hey, and if you're still tuned into this video, take a look at the videos on the screen. There's more content related to the financial freedom journey and financial education. And if you haven't, definitely hit that circle, that icon all the way on the right. Subscribe to the channel.